Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. I hope Ramadan is going really well, alhamdulillah. So let's talk about today's video. In today's video I want to look at one company, and that company is Procter & Gamble. This company has been in my portfolio for quite some time, I think since early 2020, and I'll show you exactly. So I bought my first 2 shares of this company when it was trading 130 something. Okay, so if I click this, $122 per share, and that was July 8th of July 2020. So it's been in my portfolio for quite some time. But the funny thing is, I just looked at it today, and when last time I bought this company, it was actually added to. It was actually 17th of June 2022, and now we are almost in April of this year. So I was just thinking, I need to look at this company again and see if it's actually a buy or sell or whatever. And while I was doing my research, genuinely, I haven't actually, this is not one of the videos I was planning to release today, but I was about to do the research and I've got loads of websites open. I haven't actually put anything major together. So, but then I thought, you know what, let me just share literally what I basically just see if this company is again a buy or so on with the community, rather than just doing the research just for myself. I thought I'll record it while what I'm basically about to do. So first of all, I'm going to go over the company and what they do, and then I'll look at the things like the revenue, things like dividends, things like valuations, and then I'm going to give you my plan of what I'm going to do and so on. So as you know, the company is one of the biggest companies when it comes to consumer staples. They sell all of these type of products, and it's one of those companies where we go to the basically grocery shop and we just buy their product. We don't really think about it. Especially if you have a family, okay, you just pick it up because it's the product that you bought the last month and the month before and so on. And they have a pricing power, especially in this kind of recession situation where everything has kind of gone up for these companies. They were able to increase their prices, just like Unilever, just like Colgate and so on. So they have pricing power. And when you look at their basically revenue and basically the financials highlight, this is basically their presentations. If you like to look at this, go to their website, you will find this easily. So in terms of net sales, from 2018, they were making $66.8 billion, and right now to $80 billion. So and every single year it has actually increased, including COVID times. Okay, so even during COVID, basically these companies were doing really well. The operating income is actually increased as well. Okay, so the net incomes, everything you look at here, including outstanding, operating cash flow here, and the dividend per share has increased. So when you look at this, this is the type of company I want to own, because if the top line is growing and the company is also have net earnings margin, okay, from operations from 14.8 to right now 18.4, okay, the cash and operating cash is also increasing, as well as top of that the dividends that you receive from these companies increasing. And when you look at their product line, okay, you can see these are the type of things that we just buy, like for example the home care, the babies, the feminine family care, the beauty, health, you name it, all of these things. And then one thing I really love about this company is the fact that they, when it comes to their, basically they're almost like globally well-known company. So you kind of diversified. So it's not only just you, obviously 50% is based in the US, but look at the Europe, 21%, the Greater China, and so on. Okay, so this is the type of business I want to own. Next is the total return. So I'm going to look at total return using Seeking Alpha for the last 10 years. Okay, when you look at, obviously for the last 10 years, it has underperformed the overall market. Okay, so from 151 to 212. When you look at the last 5 years, it has outperformed the overall market. In the last 3 years, it has actually underperformed overall market. So it's kind of mixture, and this is the type of business that returns at 5%, and then another 2-3% of whatever. So 5% price appreciation, and then overall you might get your 6%, 7% if you are lucky. This is okay, and more. This is more of like a dividend play more than basically a price return if you think about. but even the price return for the last 10 years, okay, it's not as bad as you would think, 88% in comparison to 58%. If you look at the last 5 years, you're looking at, they actually have done better in the last 5 years than the S&P 500. So again, it's a mixture when it comes to that. Now let's have a look at the total revenue for this company, okay? And if you go to Seeking Alpha, scroll down, you will see they have increased basically their revenue every single year, just like what we've seen now. And their revenue estimates for the next year is actually higher than basically the current and then the year after. So it's actually heading the right direction. If we look at EPS annualized, okay, take out the estimates, you can see it's also heading the right direction. If we include the estimates, it's also going the right direction. Now we're going to look at the dividends, okay? According to Simply Safe Dividend, the dividend is safe 99%. In terms of their payout ratio is about 63%. Latest increase was 5%. The 5-year growth is 5%. 20 years was about 8%. So it's still average, okay? Nothing too fast, too crazy. But you look at this growth, okay? From 2004 up until now, they have been increasing that dividend. But guess what? 66 years of increasing that dividend without cutting it. They have not cut their dividends for basically the more than I've been alive, or all of us have been alive, right? Quarterly dividends, you get $3.65, okay? And as you can see here, these are the increases. So basically 4 years or more or less kind of keeping it the same, and then increase another 4 years, and then so on. So they have a pattern, if you like. In terms of shares outstanding, it's also declining, as you can see here. Okay, so 2.51 from last year's 2.54, and it is declining every single year. Again, that's what you want to see, right? Total sales is increasing, the total shares outstanding is actually declining. Now, using interactive brokers, by the way, I've started using more of interactive brokers lately for research, because their actually research platform is actually quite good, honestly, and incorporates other companies like Morningstar valuations and so on. Genuinely, if you're looking for, this is not endorsement or anything, by the way, I have no affiliation with this, but you might want to look into interactive brokers if you're looking for a new ISA account for basically this year, inshallah. But right now, according to Morningstar, it's only 2 stars here. Economic mode of basic wide economic mode here. So 2 stars basically means it's really overvalued at the moment. So 3 stars is fairly valued, 4 stars is undervalued, and 5 is even better, so on. Okay, but according to this, it looks like that. But let's have a look at the analyst ratings. So we've got a couple of companies here that they share with us. Refinitiv Ratings is actually quite a good one, and according to them, they're saying it's about $55. Let's call it $155 per share, and right now, as you can see here, is 146. So it's about 5% up from where we are right now. According to Tip Ranks, okay, you can see here that basically they're saying it's a strong buy. It's on 157. It's about 6% upside from where it is right now. As you can see here, they've got 12 people that said is actually a buy, and then 4 that said is hold. Now, if we look at the sentiment, for example, okay, so you can see there 170 is the top, 157, and then the low of 141, which is where almost this company is. Again, you can see there's more bullish than actually bearish people, so especially with the sector, but with this company specifically, there's not that many people that actually don't like the company, right? And then obviously I've already shown you this with Morningstar, and then you've got basically a little bit of information of why these people think this should be a buy or this should be basically not a buy right now. So you can pause the video and have a quick look if you want to read through that. But from looking at this, it's a mixture. Okay, yes, I get it. According to Morningstar, it's actually overvalued, but according to other reports, it actually looks like at the moment is undervalued just a bit. In terms of key ratios, PE, when we look at the PE right now is about 24, but the 5-year average is about 22. So in that sense, it actually looks a little bit more expensive. Price to sales of 4.3, basically, and then the industry average right now is basically 1.3. So again, it seems a little bit expensive. Price to free cash flow per share is basically right now we're looking about 300 381 in comparison to the 5-year average of 55, which is actually quite expensive if you look at it that way. And the final thing I want to show you is the ratings from Morningstar. So you got 3 sections. Your quant ratings is basically the software that they use to evaluate companies. This actually Seeking Alpha website. And then Seeking Alpha authors basically that write for this company, also what they're saying, and then Wall Street. So the first one you can see is a hold 3.4. Okay, and they are saying, so the factor grades are this. So valuation, they say, is too expensive. Growth is not really there. Profitability is absolutely amazing. The momentum is fine. And there was revisions as well for B+. Now, the authors is also saying similar thing, 3%, 3, and then hold is basically is what they've said. As you can see, there are no strong buys, 3 buys, 2 holds, and then 3 sells. For this one, for Wall Street, as you can see, 13 strong buys, 5 buys, and 9 holds and 1 sell. So that's why basically this rating is a buy. And as you can see here, $154 per share is what they're saying. It's about 4% up from where we are right now. So the moral of this story is I own this company. I had it in my portfolio for a very long time, and I haven't added to it. And I genuinely want to make this company one of my top holdings. At least I wanted this to be a minimum of 5% or so. But as you can see, it hasn't actually made it to my top 10 companies yet. There are other companies that are overtaken. Although it seems a little bit pricey, okay, what I want to do now is moving forward. So there are 2 companies that are very, very similar. And I'm talking about Colgate. Colgate is one of the companies that I actually bought, I think, about a year ago, okay? And since then, I have been buying more of this company. So April of exactly a year ago. So about 5th of April 2022 is when I bought this company. And since then, at the time it was $177 per share. I actually averaged down quite a bit because I was down quite a bit at the time. But now, as you can see, I'm only down £3 or whatever, £4. This company hasn't done much, and I don't want to own. I'm trying to consolidate all my holdings into some of the companies that I think will do better in the long run. I wanted these companies to have majority of my money in there rather than just scattering around. So Colgate is one of those companies I'm planning to sell, okay, at some point in the next few weeks, maybe once the new ISA account, whatever starts, although it wouldn't make any difference, and then put that money to Procter & Gamble. Yes, it might go, my average might go up a little bit from where I am, which is $135 per share, but I genuinely think Procter & Gamble is a better position than Colgate, and owning the 2 kind of makes no sense, especially when you own Unilever. And I own also RB. These 3-4 companies, literally they own every single thing. Like when you go to the supermarkets, these companies, like whatever you buy for your family is owned either by Unilever, RB, Procter & Gamble, or Colgate. So inshallah, my long-term plan is I'm definitely going to sell Colgate. So I'm going to have a look at Unilever, and I'm going to look at again RB and so on. Out of the 3, out of the 4, I'm definitely getting rid of that one and then put the money either to Unilever or Procter & Gamble, so on. Right now, I'm thinking this more, but we will see, inshallah. I'll share that with you guys. If you want to know all my buys and sells and things that I've done basically to the portfolio for this month or whatever, head to the Discord and join us in the Patreon account, inshallah, if you would like to support the channel, inshallah. Anyway, I'm going to stop right there. Have a wonderful day. Assalamu Alaikum.